Welcome back. Keith at Crypto Bullseye. How's everyone doing this morning or this afternoon, wherever it is that you are in the world? We're getting a bit of a community around the world now, but wherever you are, you're probably doing pretty good. The bubbles are telling me that you're happy today, guys. And we've got a request here from None the Wiser within the Discord group. He's asked me to cover VELO. That's something that I was supposed to cover in the last few videos, so I do owe you one, mate. That's this guy here, the legend that is. This one is for you, and you've given me an absolute degen play. I've just noticed that this thing topped out in its bull market highs of $1.93, and it's currently trading at just over 1 cent. So this, guys, is going to be a lesson for people that think holding altcoins for a long period of time is going to pay off, because anybody that bought the highs here, that held down here, have pretty much got a bag of dust at the moment. So how do you play something that's high risk like this? Because there's a couple of key levels that I can see where you can get big gains from just conservative levels without even thinking about all-time highs, without even thinking about big retracements. And I'm going to show you exactly how I would play this. Right, okay, guys, so I'm going to try and simplify this. It's trading at 0.014019. The thing that concerns me is people held up here. This is euphoria, and this should be a warning shot to people, guys, because this was just under $2, and the people that bought at $2 are the people that thought this thing was going to the moon. They believed in the project, and a lot of them guys that hold in are pretty much zero. So how high can this thing go? The first thing that I do when I look at a chart, guys, is I look at probabilities of whether this thing is going to go to all-time high and beyond. And if I was to look at this chart now, guys, and say, what's the chances of this going to new all-time highs, hitting like 1618, 2618 extensions? I'd give it a 99% probability that it's not going to get anywhere near its all-time high. So if I'm discounting this area here because I don't think it's going to go to all-time high, how can I take advantage of something like this? First thing I want to do, guys, is understand if I've got a pie chart with a portfolio which is diversified, how much should I allocate in high-risk projects? And I'm not saying invest in this, guys. The first thing that you need to do is you need to look to find out how risky this thing is. So we'll type in VELO and we'll find out on CoinGecko how risky this thing is. And you can see from the crypto rankings that it is 434. So it's high risk. It needs to be treated as high risk. It's got a market cap of 103,486,226. That's showing that it's got a small market cap. So I've discounted this area. What areas am I interested in, guys? This is the area that I'm interested in, this shelf here. Why? Because when we drop this significant level here, this shelf here, and this is the weekly chart, guys, so each one of these candles represents 1 week of price action. This thing held for, before it dropped, 19 weeks. So it held for 19 weeks. It held as support for 19 weeks. And what happens when something drops support? Resistance. 1, 2, 3 weeks worth of resistance. So that sat at 30 cents, guys. This is where I'm going to use my Fibonacci tool from this lower high here. So I'm going to get the retracement, and I'm going to put it from this lower high, and I'm going to go all the way down to its bear market low to find out what significant key levels that I'm expecting it to hit. Because I'm not expecting it to go to bull market highs. However, if I'm using a conservative lower high, guys, real conservative lower high, and I'm looking for a conservative 38.2% retracement, how high is that from where price action is now? Let's just zoom into where price action is now. How high is that to where price action is now? There's the 38.2. Stick that on there. From where price is now, that is, zoom out a bit, 952% to the upside. So guys, it's a misconception that things need to go to all-time highs to get big gains, because that's a big gain just to its 38.2% retracement. It's high risk. So if I had a pie chart, I'd put a small allocation of that in there, less than 1%. And then I'd be taking profits at the conservative 38.2% retracement from this conservative lower high after it got battered during the bear market in the crypto winter. So that's how I'd be playing that, guys. First things first, find out how risky is it. Then you understand where the risk curve is. Then you understand how you can diversify your portfolio, and wake up, guys, every single morning and you ask yourself, if you're over allocated in something, what happens if that thing goes to zero? Because it did happen, guys. It happened to Mantra. We've seen that's what happens, guys. If your thing goes to zero, you lose everything. And that should be another warning shot to you. So what I'm saying is make sure that you understand what your risk curve is, understand that holding things during a bear market is a bad idea for altcoins, and then understand what happens if your thing goes to zero today.